Okay, everybody, thanks for coming today. We got some pretty good attendance. My name is Jeff Gibby. I'm going to be basically reading a legal disclaimer, introducing our guest out, and getting started today. So thanks for coming. Anyway, let's go ahead and get underway. Like I said, my name is Jeff Gibby. Let's get to the first things first kind of page. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So we kind of got that out of the way. I want to introduce to you somebody I feel is like a pretty good friend of mine. Dr. Barry Burns has been in the market and kind of doing education in the market for a number of years. And of course, we, as we do with, we kind of spent some time with him and developed scanning and the technologies to do what he teaches as part of the software package, and he's a great presenter. The people, as we kind of get this rolling, the people that use the new product that we've developed and designed love it. And I think it's something that you'll very much enjoy seeing. So what I'm going to do now, we're going to switch PowerPoints. I'm going to bring Dr. Barry Burns on here. I'm going to let him talk to you a little bit about what he does and his 5 energy trading methodology. So let's go ahead and kind of get to the meeting. Barry?
All right. Thank you very much, Jeffrey. And yeah, that's great. You know, it's funny because I sent out an email about this webinar before we held it today, early this morning, and it's funny, I got some emails back of people saying, "Oh, I already got that plugin, and it's great. Thank you so much for that. It's really helped me." So that was really gratifying. It was fun to get those emails, and just like to know that I'm helping people, and specifically with this particular plugin. So we put a lot of time in on this, and I also have to give some kudos to the programmer who works at MetaStock, and I think I pushed him a little bit, and but all the people over there are so nice, and so he was like, "Yeah, we've never done that before," and I said, "Okay, well, can we try?" And he said, "Well, we'll try." And good for him. They've got very skilled people over there, and he was able to accomplish everything that I asked. And of course, Metastock is such a fantastic program anyway. Its capabilities are just astronomical. And so it took a little more time, maybe than some of the other plugins to develop, but it's been well worth it, and everybody's been just thrilled, and the accolades have been coming in, and I'm proud of it, he's proud of it, Jeff's proud of it, and what we've got here is nothing short of spectacular. So just wanted to also give a big shout out to the programmer who had to be patient and creative and do some things that he hadn't done before. So thanks for him for putting in the extra effort, and it's definitely paid off from the responses that we're getting. So I have a little intro here, but Jeff's already introduced me very well. Oh, I just got notified from Technical Analysis of Stocks and Commodities magazine that yet again, many years in a row, but yet again this year, I got a Reader's Choice Award from them. Just got notified of that today. I did do a book called Trend Trading for Dummies. That's one of my latest achievements. I'm the author of that, part of the Dummies series. And that just came out a couple months ago. So that's a brand new book, cutting edge, all the latest stuff in trading that's going on right now, including everything that is affecting the market, such as high frequency trading, logarithmic trading, not the old stuff from 50 years ago, but trading has evolved a lot since then, and this incorporates all of that. So great book. Again, people over at Wiley, fantastic to work with. They were very demanding of me, but in a very nice way. And again, I appreciate that because what that did was make me go beyond what I even thought I was capable of doing in putting together really an amazing, amazing, almost textbook, but in a fun way. You know, the Dummies series is always very lighthearted and fun and clear and well organized. And I learned a lot from them in how to write clearly for people and make the reading process enjoyable, but also put just decades of my trading experience into that book. It is a real opus, and I'm very, very proud of that. So, anyway, Jeff's gone through a lot of this, so I'm not going to spend a lot of time going through all of this. We'll save our time. Also, he already went through the disclaimer, so we'll go through that and save ourselves a little time and talk about the juicy stuff. So, one thing that I do is I'm very in tune with traders. Even on my blog, I have a little app, and that app allows anybody who comes to my blog to ask me any question they may have about trading. Whether they're a student or not, doesn't matter. Anybody can ask me any question about trading. And it's fun for me. You know, trading can be kind of an isolating activity, and I'm a very social person. So I used to belong to a trading club locally, but then the owner moved to Las Vegas, and so I really miss that. So one of the ways that I get my socialization and trading with other traders is through my website and through teaching and these kind of things. And I just love getting emails from traders to know what's going on in their minds and helping them and answering their questions. And then, like I say, this little app that I've got. And then I do surveys every once in a while too. So I'm really, really in touch. I've got my finger on the pulse of what people are thinking. So here are some of the most common issues, problems, frustrations that people tell me that they have when it comes to trading. Now, there's a long list, but there's a few that really rose to the top, and you can see if you can resonate with any of these. Probably most of you can with one or more of them. So one of the most common ones was people saying, well, I take a trade and I get filled. So I enter the market, got my live position in. Then, right after I get my position filled, the market turns against me, goes in the opposite direction, and I get stopped out. And then, as soon as I get stopped out, then the market turns back and goes in the original direction of my trade. And they say that's so frustrating. And it is frustrating. Okay, that's an issue of timing, by the way. Another common problem is people saying, well, they get out of big moves too soon, and so not making the big profits. So they get in the right direction, they're making some money, but they exit too soon, and so they're not taking full advantage of the amount of money that could be made on a trade. Another one that comes up all the time is they say they get stopped out too often. So they're wondering, where should I place my stops so I don't get stopped out too often? Normally, it's not where you place your stops. It's finding the optimal entry so that you don't get stopped out. That's the real answer, and we'll address that here in just a minute. Another one, not knowing the best place to exit the market. That comes up all the time. And here's another common one. And again, you know, these questions will come up phrased a little differently. So I kind of summarized them in my own words to capture the concept or the idea of a lot of the specific questions that come in. But here's another one. They say, well, I'm trading the trend, and the trend doesn't follow through. It's like the market trends until I get in. And then, of course, as soon as I take my position in the trend, then the trend ends. So it's like they say, the trend is your friend until the end. And for some reason, people say, I always seem to get in at the end. So I get into a trend, but it doesn't follow through after I get in. In fact, I've had a lot of people even say, I get the feeling my broker's watching my account and always trading against me. Or the market makers know where my stops are. Or the specialists, you know, they've got it against me. Well, you know, they're probably not really watching your individual account. The markets are so huge and enormous that No, no, that they're not too interested in looking at any one individual's account, especially if it's a small account with, 10, 20, $30,000 in it or whatever, or less even. It's like, no, no. The problem is not that. The problem is um, trading technique, trading strategies, trading methodology. And it often has to do with the issue of timing. Your timing is off. Charts are just simply, and I'm a chart trader, I'm a technical analyst, so that's my primary way of trading. And I do that because charts tell you what's actually going on, what is. Fundamental analysis is good. It has its place. My dad, who was a trader, and he was my first teacher, he used a lot of fundamental analysis. Now, I don't use as much as he does. I'll use some when I'm doing investing. But fundamental analysis, you look at all of that, and it basically tells you what is reasonable to do, what people should do, what's logical to do. Unfortunately, people aren't always logical, and they don't always do what they should do. And so the market, when you look at it on a chart, it tells you what people are actually doing. Not just what they're talking about, but what they're doing. They're putting their money where their mouth is. The charts are maps of actual investor and trader behavior where they're putting their money down. They're serious commitments. And that's why I like to trade charts, because that's what's happening right this minute, right now, where people's commitments are. And in fact, technical analysis is just mathematics, but the technical analysis as applied to chart is the mathematics of mass psychology. That's my personal definition of technical analysis, the mathematics of mass psychology. And so that's what we're learning. And on a chart, since we're talking about charts, charts are simply two-dimensional objects. And they have two axes, price, and that's what most people are trading. Indicators, support resistance levels, price patterns, that are all based on price action. And that's good. Absolutely, you need that. Absolutely, of course, of course. But it's the second axis, the bottom axis, that people either ignore or are not very good at or don't know how to do accurately. And the bottom axis is time, right? Whether you're trading intraday charts or daily charts or weekly charts, the bottom one measures time. So there's only two dimensions to a chart, time and price. And it's the time that most people ignore. Well, how can you establish a probability scenario if you're ignoring fully 50% of the information that's available on a chart? Well, by definition, you can't, and yet that's what trading is all about. Okay, so my methodology, and we're going to talk about today, here's how we're going to do this. I'm going to talk about my methodology, how it works, what's the philosophy behind it, and how we implement it. And then Jeff is going to take after that, and he's going to show you the plugin itself. But I want you to understand the concepts behind the plugin and the system or the methodology or the strategy behind the plugin first. And then Jeff will come back on and he will actually show you the plugin. All right? So here's my methodology behind the plugin. My methodology is very simple. It's all about one thing. And that one thing is measuring what I call the energies in the market. Again, the energies are what is. The energies refer to the buying and selling actions of this big auction place we call the market. That includes the massive retailer segment. It includes market makers, specialists. It includes logarithmic trading. It includes high frequency trading. It includes all of that. Everything that goes through the market, buying and selling, not bids and asks. I don't really care about that because it's gamed too much these days. The days of the So's Bandit, way done. Okay, I used to do that way back in the days of yore. But today, people game the bid and ask, and so to me, no, I'm not interested in that. What I'm interested in is, as I said before, the commitments where people put their money where their mouth is, the actual buying and the selling. And you can watch the energy of that buying and selling. All right. Now, there's 5 energies I look for in every potential trade. And I'm just going to give you that list first. So when I'm trading, it's very objective, it's very rule-based, it's very systematic. There's nothing subjective about my trading method. So when I look at a chart, I look at for 5 things, and I always look for them in this order. My trading is very orderly. So I keep my mind clear. I get so, again, another one of the complaints that I hear from people is, oh, I'm so overwhelmed with all the information out there and all the different approaches to trading. And, there's just so much information, it's overwhelming. And that's true. In the markets, my gosh, there's way too much information for you to even consider it all. It's impossible. So what you have to do is you have to narrow it down. One of my teachers was a floor trader at the Chicago Mercantile Exchange. I got an apartment out there in Chicago, and I worked with him for a while. Got down on the floor, met other people, went out to eat with them, went to the bars with them. That's when you really learn how to trade, is when you go to the bars with these guys and they've had a few drinks. Okay, that's when that all really comes out. But it is a special experience to be on the floor as well. As screen traders, we can sit here and think the market's all about these lines, these wiggles, these jiggles, these indicators, all that kind of stuff. It's not. When you're on the floor, you get a feel for what I'm calling here the energy. That's one of the advantages of being on the floor. You can feel the energy of all the people, and the people represent the companies and the brokers and the pension plans and all of, and the whales and all the different people that are trading the markets. And you can just feel it in the air. You can sense it when everybody starts. If you've seen even videos of the floor, especially New York, yes, but the futures markets even more. You see, people going crazy. Maybe some of you have subscribed to squawk boxes, things like that. That can be helpful, but when you're there, there's just nothing like it. Now, it's changed a lot. The last time I was there, actually, it's diminishing a lot. It's not like it used to be back in the old days. But still, I think it was an important experience to have, and if you can still do it, I would recommend it because you get the feel for what I'm talking about when I talk about energy. Now, we have ways of measuring the energies on charts, though. And we use instruments to measure those energies, just like you have, I've got a friend who has a little 4-seater airplane, and he'll fly me over to Catalina Island, and, we have fun with it. And he's been flying for decades, and he's got the instrument panel. Well, he's so experienced, he can look out the windshield and he can tell you, oh, we're about this high, or we're going about this fast, or the tilt of the airplane from wingspan to wingspan, is about this, or from the nose to the tail is about this. But those are approximations, which are pretty good educated guesses because of his experience. But on the other hand, he can look out at his instrument panels, and there's an instrument that measures each one of those things precisely with amazing precision and accuracy. Okay, now what we do is on our charts, we put instruments like that. They're better known as indicators. I like to call them instruments because to me, they're not really indicating what the market's going to do. Indicators don't make you money. All they do is they measure an energy they're designed to measure. Even in our cars, we have speedometers. Well, that speedometer will tell you how fast you're going. And that's what it does. Does it get you to your destination? No, you still have to steer, you still have to know where you're going, all that kind of stuff. But the one thing it does do is it tells you exactly how fast you're going. And so you put that together with all the other aspects of driving, and you get where you're going. Same thing here. Indicators, they just indicate. They don't tell. So they will give you one thing, one energy, and then you put all the energies together to get where you're going, which is Profitville. So here's the 5 energies I look for in every single trade, and when I look at a chart, I look at it in this order every single time to keep my mind orderly. So I'm never overwhelmed, I'm never confused. It's just like getting on that plane, and my friend has a little list of a checklist of everything he goes through before he starts the plane and takes off. And even though he's been flying for probably, 30 years, he still pulls out that piece of paper and goes through that checklist. Well, here's my checklist for taking a trade. Number one, what's the trend? Up or down? That's my first decision. Which side of the market am I looking to take, long or short? Okay? Is that enough to take a trade? Absolutely not. Then I move on to energy number two, momentum. Now, this is critical because trend trading is great, but this is where one of those issues comes up that I mentioned, where people say, well, I get in the direction of the trade, and then when I get in, the trend fails. Well, why does that happen? One of the reasons it happens is because they don't know the difference, or they don't have an instrument that measures the difference between a strong trend or a weak trend. They have a trend instrument, but they don't have a momentum instrument. You got to put those two together. One without the other is useless. So this is why people so often say, oh, indicators don't work. Well, that's actually a false statement. Indicators work for the purpose they were created, which is to, basically, they're just mathematical formulas. You put numbers in one side and a value comes out the other side, and that value is accurate, so it does work. Now, what they mean, of course, by not working is they don't make you money. And that's true. I agree with that. But they're not really designed to make you money. They're designed to give you a value of what they're measuring. Now, to make money, we have to put it into a complete methodology, which I'll show you here. That's actually, we're in the process of doing that right now. So trend, okay, that's one. Which side of the market are we going to take if we take a trade? But we haven't decided to take a trade yet. Number two, momentum. If the trend is weak, I'm not going to take the trade in the direction of the trend because then it will probably fail. So I'll only take a trade in the direction of the trend if it's strong. All right, then energy number three we go to, and this is cycles, timing. And as I said, you see a lot of people don't have any sort of timing indicator or timing tool. And so they're just trading price action, but they don't know when to enter that trend. So they might, let's say it's an uptrend, and they buy an uptrend. Well, maybe it's an ABC complex retrace coming down, a correction, ABC correction. They get in on A, market goes up just enough to fill them, and then it makes a lower low for the C wave. And they get stopped out, and they wonder, oh, what's going on? And then, of course, the market turns right around and goes up the original direction of their trade. And they got, they lost money. Well, that's because they don't know how to time their entries with precision. And so that's where our cycle indicator or cycle instrument comes in, so that even though we're trading with the trend, I like to buy retraces or short retraces, but I want to get in at the lowest low of the correction before the market goes back up. And for that, I need an instrument that tells me when that retrace has exhausted itself. Then the fourth energy I look at is support resistance, and that's simply a blockage of the first three energies. I'll use this both for entries and for profit targets. And then the fifth energy is what I call the fractal energy. Now, this is a very common thing that's used, a fancy term, fractals, but really all it means in trading is using multiple time frames. So, for example, if I'm trading setups on a daily chart, where each bar represents one day of price activity, I'll also look at a weekly chart, and I will confirm my trade with a longer time frame of the same instrument or the same market. If I'm intraday trading, let's say I'm trading a 5-minute chart, then I would also look at a 15-minute chart, and that 15-minute chart is what I call my fractal energy. So I want to look at the same instrument or the same market on multiple time frames, different scales, to see what's going on there. And now the old-fashioned way of doing that is to say only trade in the direction of the trend of the longer time frame. And unfortunately, in today's environment, the market's changed so much with decimalization. We used to have fractions with stocks. Now we've got decimals with a lot of retailers coming in and trading from their screens, which creates a lot of noise, by the way, and a lot of static in the markets. And then you get your high-frequency trading, your logarithmic trading. Just the markets move different now than they used to. So a lot of the stuff that the old classic book tells you to do They worked back in those people's days, but they don't really work now. So when we come to multiple time frames, I don't at least, use the trend of the longer time frame to make my decision. If we have time, I'll show you what I do use. So the purpose of using these 5 energies is to determine a probability scenario. In fact, that's really the purpose of all trading, is to come up with a methodology to determine a probability scenario that favors you, which of course is what makes trading different than gambling. How do I determine a probability scenario? Very simple. At each potential entry point I'm considering, I ask myself one simple question. How many of those 5 energies are aligned, saying buy or saying sell? Based on that, I give each setup a score from 1 to 5. Obviously, the higher the score, the higher I consider the probability of success. I liken this to taking each trade to court. And what I mean by that is we need 5 independent witnesses to establish a preponderance of the evidence. Now, the operative word there is independent. So, in other words, if you were to put 5 trend indicators on a chart, that would not give you a probability scenario, because all you're really doing is using 5 instruments to measure the same energy trend. And the number 1 does not give you a probability scenario. Probability scenarios are established by having a number of variables. And especially the more uncorrelated the variables, the better. So that when they align, then that's what gives you the probability. And that's exactly what we're doing here. These 5 energies, each one of them is uncorrelated to the other 4. So that's what makes it significant when they all say buy or they all say sell. That's what puts the odds in your side. So let's go through these 5 energies real quick with some chart examples. So energy number 1 is trend. I use the 50-period simple moving average as the intermediate trend indicator. It gives the overall direction of the market. In this case, it's down. The black line there on this chart is the 50 SMA, and it is angling down. And therefore, we would say the indication is we're in a downtrend. Again, that alone is not nearly enough to trade off of, but it's 1 of 5 energies. It's 20% of the situation. Now, here's what I was talking about earlier. Classic definition of trend. This goes back to, again, some of the old classic orthodox books, which I respect. But the classic definition of trend is higher highs and higher lows. Well, see here we have a higher high. Well, we have a higher low and a higher high. But that is not a trend. That is not an uptrend. In fact, Webster's dictionary defines trend as this: to extend in a general direction. So think about that. To extend in a general direction infers a long-term move. That's a short-term move. Higher highs and higher lows could be very short-term moves. So if you're going to use a moving average for your trend indicator, and there's many options, you could use another indicator, but it has to be a long-term indicator, because trend is by definition long-term. That's why I use the 2 reasons I use the 50-period simple moving average. Number 1, it is long-term, so it fits the definition. And number 2, it and the 200 simple moving average are the 2 most commonly moving averages, and therefore they have a bit of a self-fulfilling prophecy to them, because the markets are a huge auction place, and the more people that see something, the more people that respond to it. And so therefore it's actually good to use tools that a lot of people use because they respond to them. Sometimes people think, oh, it's good to have some esoteric proprietary indicator nobody else sees. Well, not necessarily. In fact, it's actually quite the opposite. You want to make sure you see what everybody else sees so you know what other people are going to respond to. All right. Now, here we go. Energy number 2, momentum. Here, I'll get my little arrow going here. There we go. So here we have a low. All right. How would you know to buy this higher low? All right. And then, of course, the market makes a higher high. And then it makes another higher low. What about that higher low? Would you buy that higher low? The problem is the market after that does not make a higher high. It makes an equal high. So how would you know that's a good one? It'll make a higher high, and this one will not make a higher high. The problem is you wouldn't know just looking at this. Just having a trend indicator does not tell you that because you're blind to momentum. And so in the plugin, we put in a momentum indicator to tell you the strength of the trend. That's what helps you determine whether you should buy, this higher low is going to have momentum behind it to put in a higher high. This one is not going to have momentum. It will not put in a higher high. All right, so let's take the blinders off of that momentum indicator, take the curtain off. And you can see, here's the momentum indicator. It's actually the red line. The black line is just a moving average of it. And here we have a much higher low. Okay, now over here, that's your zero line. If momentum gets down to zero, then there's no strength left in the market. So we want this to hold above zero and be above the previous cycle low in order for it to show momentum, strength, that the trend is strong, and therefore we should expect at least another higher high. Now, at this higher low on price, look what happens on momentum. Lower low, lower low, lower low on momentum, and the momentum indicator, higher low on price. So momentum actually is a potentially leading indicator. And the reason that is that at highs and lows, they occur generally in two different ways. One can be exhaustion, where you get an explosive move. Now, momentum, again, if you learn to read momentum, that can actually help you there too. But the other way is, and the more common way is this, where price will make higher highs, but on weakness. And that weakness is shown up in the momentum energy before it's shown up in price action. And that's the example here. And therefore, we would look at that momentum. We'd say, yeah, trend is up, but momentum is getting weaker. Therefore, I don't expect we'll make a higher high. The odds are against it. And therefore, I will skip that trade. I will not take that higher low on price. Okay, energy number 3 is cycles. Now, markets wiggle. They don't go straight up. They don't go straight down. They wiggle up and they wiggle down. They oscillate. Okay, as I said before, charts have 2 dimensions, time and price. If you don't have a timing tool, you're leaving out 50% of the chart. Therefore, you can't establish a probability scenario. Cycles are like the rhythm of the market. They're like the breathing, the expiration, the inhale, the exhale of the market. They time when to buy and when to sell. And as part of the plugin, you get the cycle indicator as well. So cycles help you time the market. What they don't do is they don't give you direction or range. Direction is trend. Range, how far the market's going to move, how strong that move is going to be, that's momentum. And so again, cycles, like any other indicator, cannot be traded by itself. So we get a cycle high here, but would you want to trade that short? No. Why? Because there's no momentum. And so the market just ends up going sideways. See, the cycle just measures time. So even though the market's going sideways here, going sideways all the way through here, we're still getting a cycle high. We're still getting a cycle low. We're still getting a cycle high because it doesn't have anything to do with the range of the price or even the direction of the price. It's just purely timing. Remember I said each one of these indicators is independent or uncorrelated to the other 4. You're seeing some examples of that right now. Support resistance is energy number 4. So we expect this resistance to hold here. Now, sometimes you can put so many support resistance levels on your chart that it seems like the market can go nowhere without hitting a line. So you got to be selective. Got to be selective on which support resistance you put on a chart. And then the next question is, well, sometimes price goes through support or resistance, and other times it holds and bounces off support resistance. How do we determine which levels are likely to hold and which ones are not likely to hold? Well, again, by itself, support resistance doesn't tell you which of these levels will hold or not. But in conjunction with the other four energies, you can establish a probability scenario of that. So we would expect this resistance to hold here, where the first arrow is, at a cycle high. Why? Because momentum is down. And so in order for the price action to blast through a resistance level, it takes strength. If price comes into a resistance level on a lower high, so you've got a lower high on momentum here at the bottom, then that shows weakness. It's pushing up against that resistance, but with weakness. There's no strength. So therefore, we expect that resistance to hold. And that's a good place to go short. Now, it comes down to this. This is a Fibonacci level down here, this dotted line. And we don't expect this one to hold, this support level to hold. Why? Because momentum is still down. And so, yeah, it kind of consolidates, but then it does break through. Why? Because there's strength to the downside. And then finally, the energy of fractals, the fifth and final energy, which again is just a fancy name for multiple time frames. So here on the left-hand chart, we've got a 5-minute chart of Apple. And where the black vertical line is, this would be a potential entry. It's a first retrace in the trend. It's an ABC complex retrace. It's actually a symmetrical triangle as well, which is great. We love that. And so we're considering this. We've got a cycle high, 50 amazingly down dramatically. That's the red moving average there. We've got a cycle high with a cross, and momentum holds below 0. That's one of the keys here, is for we want to make sure that momentum doesn't come back to 0. So if we're going short, we want the red line to hold below 0. If we're going long, we want momentum to hold above 0 to show strength. Now, before we can take the trade, though, so the setup on the 5-minute chart is great. Now we go to our fractal energy, the long-term chart. What do we look for there? Okay, the energy of fractals on the long-term chart, the 15-minute chart on the right, reveals the energy on a chart of a different scale to make sure we're not fighting a greater energy, a bigger time frame, potentially a more dominant time frame. And what we look for here is not trend, but we look at primarily momentum. And here again, you can see the red line, momentum is angling down at the time we would enter. And also, I like to look at the cycle indicator, and the cycle indicator is angling down at the time of entry. Therefore, we would say that is confirmed, and it's confirmed by the longer term time frame, and we can take the trade. We would have a, going back to our scorecard, we would have a 5 out of 5 trade. Trend is down, momentum is down, bearish, held below 0, got a cycle high. We've got resistance of the 15 exponential moving average. That's the black line that's holding price there. That's 4 energies. And then the fifth energy, looking at the chart on the right, momentum is angling down. And we've also got cycle angling down. So that's a 5 out of 5, and we can take that trade. So if we put it all together, here's another example. And this time we've got a 10-minute chart on the left, and we've got a 30-minute chart on the right. 5 energies aligned at the same time. We're starting a new trend. And so we got a first retrace in the trend. See, there's wave 1, wave 2. By the way, the Top Dog trading plugin does measure waves for you automatically. It plots them right on your chart. These are not manually put in. These wave counts are automatically plotted by the plugin for you. So automatically done. All right, so we're starting a new trend. First retrace in the trend, which would be a wave 2. That's one of our favorite trades. Remember, the trend is your friend until the end. So we want to get in at the beginning. The earlier in the trend, the better our reward to risk ratio. So we're starting a new trend. Now, momentum is angling up, so that's good. Cycle low. This is actually a special cycle pattern that you'll read about because the plugin comes with a manual that teaches you some extra things I don't have time to go in today. And then let's see, trend, momentum, cycle low, support of the 50 MA. The red line is the 50 MA. This is actually support, even though the bars get a little bit below it. Technically, as long as one of the bars is touching a support level, we consider it still support. Support and resistance are zones. They look like lines on a chart, but they're really zones, and you have to consider it that way because the markets have some noise to them, a little bit of static. Can't be too precise with markets because they're a little noisy, a little messy. Why are markets a little messy? Because people are messy and people trade the markets, okay? So that green line or that green bar is touching the 50 MA and the other two are just inside of it. So that is holding the 50 MA. And then we looked at our longer term chart, in this case, 30-minute chart, and we're good. Now look, again, 50 MA, trend is down on the 30-minute chart. We don't care about that though because trend is always a lagging indicator. And we use trend along with momentum, a lagging indicator with a leading indicator. Momentum here is angling up, cycle indicator up, and therefore it's confirmed. And again, that would be a 5 out of 5 trade on our scorecard. So let's summarize here, and then we'll bring Jeff on to give you the specifics about the plugin software. All we're doing, very simple method, waiting for the alignment of the 5 energies to put the odds on your side. And you know, I was out doing a seminar, live seminar in another state of the United States here a while back, and great trading club. It was a trading club that invited me to come. Huge, boy, one of the largest trading clubs in the country. Great people, really fun. Went out to dinner with them and with one of the kind of subgroups of the trading club, and they showed me a trading plan they were putting together. It wasn't done yet, but they were working on it, and it was pretty impressive. They showed it to me. They plopped it down on the desk or on the dinner table and just about spilled all the waters out of the glasses. That thing was over 200 pages long, and they weren't even done with it. So, wow, you guys put a lot of work into this, and they had. My trading method is 1 sentence long. All right, so not quite as complicated. But I'll tell you, when I was at the CME, the stuff the guys were doing there was pretty simple. In fact, amazingly simple. Sometimes less is more. And quite often people think to improve their trading, they need to add more stuff. What I found in working with students is when they come to my office, they'll bring their laptops and they'll show me their charts. And usually they got too much stuff on their charts. And it leads to a confused mind, and a confused mind cannot trade. So we usually help them be successful by simplifying. Instead of adding more stuff, we usually take things away. So here's my trading method, very simple. It all is in 1 sentence. Number 1, we look at a chart and we look for trend to decide which side of the market we want to be on. Then number 2, is it a strong trend or a weak trend? That's our momentum indicator. Then we wait for the right time. With our cycle indicator, it will tell us the right time to get in. Then we make sure we're buying off support or shorting off resistance. And finally, number 5, we look at the next higher time frame, and we will only take the trade if the energy of momentum is angling in the same direction of our trade. If it's not, that's a filter that keeps us out. That's our final filter. And that's it. It's pretty simple. It's all I do day after day. It's a very robust and adaptable method. It works for a variety of markets. I use the same 5 energy method, trading stocks, commodities, options, currencies, futures, and I trade all 5 of those markets, by the way. And I use the same 5 energy method whether I am investing, swing trading, or day trading. And the reason it's so robust and the same method works for all these markets and all these time frames is because, think about it again, all we're doing is we're putting these instruments, like on the panel of the airplane or the car, the dashboard of the car, put the instrument on the chart, then you just apply whatever market, in whatever time interval, and those instruments or those indicators will tell you what the energy of that market in that time interval is. So it's very simple, very objective. You can count to 5. That's all you need to do. So that's it. That's the method. That's the approach. That's the system. And I'm going to turn it back over to Jeff now, and he's going to show you how they've taken this methodology, or we've taken this methodology, and we've incorporated into a software program, a plugin specifically and only, by the way, it's only available on MetaStock, on how we do all of this and automate the wave counts and all this different stuff. It's really, really powerful. I'm really proud of it. So, Jeff, back to you, my friend.
Well, everybody should be able to see my monitor right now. I'm going to go ahead and assume that you can. If you have questions, go ahead and ask them. I should be able to see them coming in real time. And I just want to walk you through a few of the things. Obviously, this thing is, in my opinion, very, very cool. We did push the envelope in terms of the things that you can do in the program. And so what I want to do is I want to start by showing you kind of how the template looks. Obviously, we're identifying and labeling the wave counts. We're drawing on here the second chance lines and the second chance levels. And this does a really good job of kind of identifying and isolating all of the patterns to you. You'll notice on Apple just a few days ago, we had a first retrace after the short signal. And when that happens, if you come in here to the commentary window, I'm just going to go ahead and open up the commentary window, and I'm going to click on that day. And what it's going to do is it's going to initially tell us as soon as that signal happens that there's a first retrace after the cross short signal. It's going to give us our entry, our initial stop. It'll tell us what to do if we're doing a 4x trade to subtract the spread from your enter trade. And it'll also give you the targets that you should go for. In this case, it's the first cycle low where it coincides with the support level, the second cycle low, or a trailing stop of your choice. That's how you would use stops in the program. On this one, we literally had so much information that we wanted to be able to share with you about the different signals, but what we did was we put together HTML files that if you're reading this for the first time and you're saying, okay, well, I'm not sure what a first retrace after the cross short is, what you can do is you can just click on this link here, which I just did. It's going to open up in an internet browser window like you see here exactly what the setup is, what the confirmation is, what the entry is, the initial stop, what your targets, and the other things that you should look at to increase your probability of having a successful trade setup. So we included, I think one of the nice things about MetaStock is the ability to go in and say, okay, well, here's how you want to get in, here's where you want to enter, here's where your stops are in the commentary. The ability to explain a pattern to you and when it happens, so you don't have to go dig through this presentation and find the exact right spot where he's talking about the first retrace after the short. It's right here. So until you're familiar with that pattern, you'll be able to look at it. Going back to the chart, you'll notice that I've got, I'm just going to go ahead and close down this commentary now I've shown you. Notice that I got all the wave counts. Those are fully automatic for you. And you'll notice we have buy and sell signals that show up on the chart when certain conditions are met. And I want to show you exactly what we're looking for and how you can use MetaStock as a program to scan for those changes. Oh, that made me jump out of my screen. Let me send that phone call to voicemail. That woke me up. Let me go ahead and come back into the PowerPoint. I just want to show you exactly what we're looking for in terms of the scans and how, and then I'll come back into the software and show you. So we've broken up the scans into different categories. There's new trends, which is your first retrace after a long, or a first retrace after a cross short, or first retrace in a trend long, or a first retrace in a trend short, second trend trace. So these are patterns that we've built into the software. So you'll be able to see those as alerts that show up on the chart. You're also going to have your longer trends, like your wave 7 reversal, long and short, and your 9 reversal, wave and short. And then you're going to have momentum patterns. We've got first high after the DAD turns up, down, going short, or the first low after the DAD turns up, going long. There's the reversion to the mean, which would be your rubber band trades. When things get too extended, it acts like a rubber band. It'll bounce you back into it. And then there's also triangles. So there's quite a few patterns in here. Now here, this is just showing you how to scan, or how you use the MetaStock scanner. So let me go back into MetaStock to show you that. If I'm in the Power Console right here, everything that's listed, I'm just going to click on the Explorer icon right here. All the scans that we have available are listed under Top Dog. So you've got your DAD trades. You've got these confirmation scans that you can run on your list to confirm that it's a valid entry signal. You've got your rubber band trades. And the way that this would work, I'm not going to run one now because it takes a few minutes to run through, and I only have about 10 minutes to really show you a lot of information. But what you would do is you'd select the scan. If we wanted to find a Top Dog rubber band trade right now, what I do is I just select this Top Dog rubber band as a scan. I go ahead and click on Next, and I define the list of the ones that we want to look against. So if you're here in the US, you could do like all of the optional stocks, or you could do, if you're up in Canada, you could do Toronto Stock Exchange. If you're in India, you could do the National Stock Exchange. We have about 181 exchanges globally. So no matter what you're looking for, you're most likely going to be able to find it in MetaStock. For this, I'll just select the S&P 500. I go ahead and click on Next, and I say, okay, go ahead and run this exploration. And what it's going to do is it'll go through those 500 stocks. I'm not going to run it like I said. I ran it while Barry was talking. It took 4 or 5 minutes. It doesn't take that long to run, but I've got about 8 minutes left. But when that comes back, what you're going to see, here's the Top Dog trades, and you'll notice I have a report for it. So I'm going to open up that report. Is instead of looking at 1,000 or 2,000 stocks to find the particular setup that you want, you can run that exploration, and it's going to tell you the day I ran this scan, which is right before the Christmas break, we had Cernier Corporation as a long signal and Covidian PLC as a short signal. So it allows you to mine really any day exchange that you want, or any set of stocks that you want, to really find the ones that have the opportunity that particular day that you're interested in. And so with this, we did build in all of the tools and all of the scans, and we get a lot of Barry's customers that are like, I can finally go in and find my Top Dog trade setups on the S&P 500 or the optional stocks, or I could use it in a different market than I'm used to. And all of that is absolutely true. The ability to scan in MetaStock and the ability to partner with somebody like Barry, who is a really good market timer, and put it as information is it's really a cool thing. Let me go back to the PowerPoint for just a little bit. I want to make sure I don't. Obviously, we're giving you a super high level view here, but this is again the scans. We talked a little bit about how all of the levels are going to show up, the initial entries, the initial stops, and we talked about the HTML files giving you kind of that in-depth, detailed information about the trades that you're getting and how those run. Here's again on one screen just the things that we're looking at, about 20 or 25 different patterns. I don't know, somebody count them and correct me, but quite a few different patterns that Barry has been teaching for a number of years. We do include a lot of indicators in here. We have the ability to automatically put Fibonacci and automatically put swing lines on there, and 4-trader pivots, and you get your second chance line. So there's a number of different indicators, and this is really where we push the envelope with MetaStock quite a bit, is your ability to go in there and draw out all those cycle lines, or draw out the pivots, or show the automatic Fibonacci lines. Very, very cool technology. People that have got this thing love it, and you should try it out. In there's 3 templates that are included. There's one that you'll use on a daily chart. If you're looking at intraday timeframes with MetaStock Professional, for example, you'll use the intraday chart. And then there's a weekly confirmation chart, and those are different templates that you apply. And the way that works, just to show you that in MetaStock, is right here I've got the chart of Apple, and I'm looking at it on daily. Anytime you want to kind of switch to maybe a different view of the chart that you're looking at, let's see, I wanted to look at the intraday view. So let's go ahead and put this on a 30 minutes. I'll let the data load in. What I can do is I can just go right-click on this chart. I'll go to Apply Template. And under the templates, you're going to have Top Dog Daily, Top Dog Intraday, and you just sign the ones that you want, click on apply, and that'll reload in. And you'll notice we've got all of our support and resistance levels automatically calculated. We even drew a line to where we were calculating our Fibonacci's. They did a beautiful job of coding this up in such a way that shows you all of the information on one screen. This particular product is, let's go ahead and get back here, normally about $500, and it's worth every penny. This is a one-time cost. We'll always come in here with Barry, and people will be like, every month I have to pay $400. No, that's a one-time cost. Here at the event, what we're going to do is I'll give you a $100 discount, so it's $399 just for coming today. If you need access to MetaStock or MetaStock Pro, you also have the ability to do that on our website, and it's just a free trial. The other thing that we do is we'll give you, I know you're only sitting down with us for an hour, and so we can only show you so much in an hour. We had to kind of be selective about what we show you, but I want to make sure it's something that's very useful and very worthwhile for you. So in addition to the $499 and getting $100 off that, so you pay $399, and in addition to the complimentary access to MetaStock or MetaStock Pro, we also give you a money-back guarantee, which means if you decide that it's not going to be helpful in what you're doing or in the trading that you're doing, you can cancel it. We can give you a refund on the one-time cost. The only thing we can't refund is if you pay exchange fees, which are optional. Those are not refundable, but everything else would be. If you have questions, please feel free to reach out to our guys. We have salespeople that are here that can kind of answer questions you've got about TopDog. And you can reach them at 800-882-3040. And that's really kind of what I wanted to show you with regard to the TopDog Trading Toolkit. The reason that you're going to want it is it's a great toolkit. Barry knows what he's doing. And for the first time, it's something that gives you the ability to do scanning and kind of explains the signals and gives you those stop loss. And this all happens automatically. So again, the idea of being able to go into a methodology that works well, take the emotions out of that and trade with it and have everything explained to you. It's a very, very powerful thing. I do want to say, before I kind of sign off, that I really appreciate Barry's work on us. A lot of people don't know this, but we probably spent 2 or 3 years pulling this thing together, and I am also very proud of the work that we did. It was a great product, a good development cycle, and there's definitely it's definitely worth trying. Give it a shot. $400. That you can make that up in one trade, or not taking a trade that would have been otherwise bad. So give it a shot. Let me know if you have any feedback or any questions. Drop me an email message at jeffrey.gibby@metastock.com. I'm just going to check to see if we have any questions. I don't see any in this view. So with that, what I'm going to say is thanks for coming today. I know a lot of you are on a lunch break or whatever. Really appreciate your time. Thanks, Barry, for coming in and kind of giving us a little bit of a class. And for all of those of you that are out there, try this thing out. It's really, really cool. You're going to enjoy it. All right. That's it from me. Thanks for coming today. The offer there is www.metastock.com/TopDogA. And with that, we'll see you at the next webinar. Thanks, guys.